Well, Steve, bubbles, bubbles, bubbles. Bubbles everywhere, nor any drop to drink. No, that's water.
Tiny bubble.
Tiny bubble. We're going to talk about bubbles today.
Economic market bubbles. So you really want to watch all the way through because we get in some deep conversations.
Deep. Being you're going to be stuck in that bubble.
Hey, Steve.
Hey, Steve. How are you doing?
Let's see. Today I'm doing unbelievable.
Well, that is just unbelievable. I'm glad. The weather is just not... What's happening to the spring weather?
Yeah,
last
week we were in short sleeves.
Yeah, and now
we got to put our extra layers back.
Of stuff. Yeah. Welcome to the Steve and Steve Show. I'm Steve Wastenberg.
And I'm Steve Walsh. Thanks for hitting that play. Make sure you hit that subscribe button so we can add to our subscription. And certainly if you enjoy our show, either now or later in the filming, hit that like button. And
just to be safe, why don't you just hit the like button?
That's right.
Just to be safe.
Just to be helpful and friendly.
That'd be awesome. Nice. So.
All right, Steve. So I am sitting in front of a medium tall glass full of what looks like to be milk with an ice cube.
Yeah, looks are deceiving. This is not milk. This is actually Irish cream, Jameson whiskey, a little bit of half and half, and then a little bit of surprise that I'll let you figure out.
So is it Irish cream and Jameson?
Yeah,
so we're all on the Irish.
Yeah, this is kind
I wore the right color then.
You did, and I didn't. But I was born on St. Patrick's Day, and he wasn't.
And you're a Wastenberg.
And yeah. Oh, Wastenberg.
Oh, Wastenberg. That could be dangerous.
It's got a little Kahlua in it, too. So there. Well, I figured we'd need a little coffee in this drink.
A little Kahlua?
Yeah. A little coffee.
That's a Hawaiian thing.
And you know what? There are some bubbles in this drink. So why don't we talk about...
So it's kind of like an island drink.
It is like an island drink.
Hawaiian, Kahlua, Irish... They're an island, right?
And you're right. Ireland is an island. Island. But why don't we talk about bubbles? Tiny bubbles.
Bubbles.
In your... Okay, no, not those, but bubbles. Steve, what is a bubble?
A bubble. Well, I think you're referencing like the economy type bubbles.
Yes, I am. The economy, finance...
So we've heard...
Real estate.
We've heard some experts say that we're in all types of bubbles.
Yeah.
Almost everything bubbles.
But when do they not say we're in a... Somebody not say we're in a bubble?
Immediately after the market crashes, the bubble has been popped.
Okay, so... so every other time it's like we're in a bubble.
Yeah, I think that's kind of the case.
I mean, seriously, it's always growing to a bubble, and they're always going to pop. So, but let's talk about some of the like real estate right now. So we're in 2021, the spring of 2021, and boy, are they saying that this is a real estate bubble, right?
Yep. Did you just call me girl?
I was trying to be really
with it
equal and say girl and boy. Let's stop there before we
we're not going to go that
rabbit holes and say, but are we in a real estate bubble?
So if you think about the bubble, right? So it's...
I'm going to need some drinks on this.
You've been to a carnival.
I have. I love carnivals.
So you ever played that there's that game, the water shooting game, where you shoot water into like a clown's mouth or something.
It blows up the...
Yeah, then there's a balloon on...
Every time I think of that clown, though, I think of it, and anyway.
Yeah, but as you blow, there's a balloon that gets blown up,
right.
And as it expands at the top of the game, there's a needle, right, and once you hit that, it pops.
Right.
And I think that's the intent of these market bubbles is that when we're in growth, those bubbles are growing, but where it becomes scary is how far do those bubbles expand before they pop?
So why does it have to be a bubble? Why does it have to pop?
That I don't know, but I think it has. I think the reference is that there is a pop, right? That there is a downturn. That there, and I think the concern would be the fast,
The exuberance,
the collapse of the bubble.
Okay.
Right.
All right. So, I mean, we could reference it as a bubble. We could also look at it more as cyclical, right? That things happen in cycles. That things go for a time and then they drop off, and then they go again, and then they drop off.
Yeah.
But we always have to put the drama in it about this great bubble that, yeah, you better. And
I think it's more that some of these markets grow at a fast rate. That's where they get the whole bubble piece.
Okay, so we've got real estate, right? Let's look at real estate for a second. In real estate, we had the kind of financial crash of late 2007, early 2008.
Yep.
And that would have probably been characterized as a bubble popping. And then, since then, so we're coming on now, 13, 14 years almost, 13 years. And real estate has been on a trajectory in terms of valuation anyway, and in terms of interest rates going down and valuations going up, that has been pretty solid incline. Would you agree?
It is normally, like when you look at real estate, it's like a 40-year period. And over a 40-year period, you can say it like an average of a 5% appreciation. That's what it used to be.
Okay. Per year, 5% per year?
Over the 40-year period.
Oh, over the whole 40 years?
Yeah, it's a 5%.
That's a weak investment. Anyway, sorry.
Well, if you buy right, it may not be.
Okay.
So that's kind of the overall, right? So the closer you get to the middle of our country, you can actually see that 5%, right? But when the closer you get to the coastal cities, either on the East Coast or the West Coast, you see more of a volatile market where it's up and down, up and down, up and down, right? Up, 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 down, 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 up and down.
Okay.
But in the center of our country, it's very stable. You don't see a whole lot of appreciation or depreciation. It's just kind of, they ride it out fairly well. But what we see when the experts start calling an economy a bubble is when it has fast growth. Now, when I took my real estate training for investing, one of the things it says when it's kind of below that 10% appreciation mark, that's real appreciation. That's natural market moving stuff. When it gets above the 10%, that's not natural, and that's like the fast-paced stuff, right? Okay. So that's when the bubbles start to well, it's the bubble, it's the growth, right? But it's that fast growth is when it's not stable, right? And I think that's kind of the more of the bubbles, or when they start calling it a bubble, is because you have that fast growth in it, and so something's got to give. And you're right, it's secular, where so many years we see a little bit of a slowdown, and then we see it get back up, and with the recent economy being is very strange right now.
This is a long cycle.
Yeah.
It's usually not this long.
So 2008 was when the housing market crashed. And then, sometime in 2009, 2010, it started to kind of turn a little bit, but kind of bottom out and start heading up. And so you look at the patterns and they say, okay, well, every 7 to 8 years, right? So in 2016, when 2016 came around, people really started to get nervous about the housing market. And it never really cycled back down in 2016. And here it is, 2021, and we're still seeing double-digit appreciation on the market.
And it seems like maybe accelerating. I mean, I was going to say that it's starting to shut down, but I'm talking to my friends in the industry, and they're saying, no, there's still a big-time housing shortage.
Right.
And there's still a lot of demand around, I go and look at Zillow, and you probably looked at your house, and there's like cash offers they want to make on.
Yeah, well, we sold our house last year, and we got full asking price and sold it within 24 hours, right? So
Just got a friend who did similar thing very recently, and they got over their asking price, and they had multiple offers on it.
So 2 different seasons. We were going into a slower season in the fall, and we were also going into the election, which is adds an uncertainty to it.
Yeah.
Now we're past the election. We're going into buying season, and we still have the same scenario: low interest rates and low inventory, what's available, and so people have to overbid because it's very competitive.
Right.
So it's definitely strange. Certainly, I don't think it's healthy. And so the question is, can it last? And if it's skyrocketing that far, the saying is, whatever goes up has to come down.
Right.
So
although maybe we've got technology now that we've got those rocket burners that they're sucking something out of the air and creating more fuel, and so maybe the rocket just keeps going.
Well,
I doubt it.
What's interesting is, our government measures inflation, right? In recent times, I think they used to have housing used to be part of the consumer price index, and sometime during the Obama administration, they removed housing from the consumer price index. So even the inflation that we're seeing today does not take in consideration the housing market.
Wow.
So that's kind of the part that's, what do we live in, and is it because are we seeing the appreciation or the housing market go up because we have a true inflationary period that we're living in, or is it just because we're in a strange
We
state.
are. I can see it from the standpoint of the stock market. The stock market also is something that is a hard thing to gauge, and there's always this. We've been hitting new highs, and there's always in the back of your mind, okay, when is this going to correct? Is it going to correct? And yet FOMO, which is that fear of missing out,
right, which is real.
It is real. It is real. If you're looking at stuff and standing on the sideline, and we're going to give an example of that here shortly, you're looking at it and you say, well, how could I miss that? It's right there in front of my face, and I just missed that. And that, builds and creates more momentum and more exuberance for whatever the sector is. I mean, to segue for a second into something like cryptocurrency, I mean, Bitcoin really started right after the housing crash. In fact, within the Bitcoin white paper, there is a phrase talking about an English bank and what it was doing. It was a news article that was kind of like something they put right in the code, whoever Satoshi or they are, that talked about the housing crisis. And out of that came this decentralized currency, which has had, during this period of its life, which is almost the same as the time we're in, about 5 different cyclical crashes. Now, over the time period, it averages about 200% a year, which is really good, but there were plenty of times where it would crash down and then come back up again.
For the Bitcoin?
That's for Bitcoin specifically.
Right. So Bitcoin to me is a young asset. Mm-hmm. Right. So what's hard to really say if Bitcoin is it really in a bubble, or is it still in its growth, like in its infancy, where it's still. So it's hard to. But like if you look at like assets that've been around a while, right? That you have the stock market. Lots of people say that that's in a bubble because it's hitting all-time highs, right? The real estate market's in a bubble because it's hitting all-time highs.
Well, but before we get to that, so my point about, so if we take the stock market and we go back to say 1900 and we chart it all the way through to today, there are plenty of times where it would drop down, and then cruise up, get to what we're talking about as a bubble, crash down again, get back up, and that trend line. Same thing in real estate. You can see the kind of cyclical happening in real estate. Well, Bitcoin has 13 years, let's say, almost. It also has had 5 of those cycles just in these years, where people would say, I mean, when you talk about a 40% crash or correction, that's a pretty solid correction, right? And it's had like 5 of them in this time period. So I'm just talking in a small frame. And I agree with you. It is a new asset, and I personally, truly believe that we haven't seen anything, that it's still at a place right now where, it's likely to be. That's not financial advice or anything, and we're not financial advisors.
So when we talked about that game with the balloon, right? So when I look at crypto or Bitcoin, we don't really know how, we really just don't know if it's, still a small balloon or if it's expanded. Where you can look at something with a little bit more history on real estate, you can say, okay, there's something strangely odd with the market with this one. So Bitcoin, is Bitcoin in a bubble? I don't think it is. Is the other bubbles helping Bitcoin grow? I think so.
Yeah. No, I think I would agree with you on that.
So that's why, and then so I'd go back to like when we started, we talked about bubbles, but I also, if I said it correctly, I think we said almost everything bubble. Right?
It's true.
So not everything is in a bubble, and I wouldn't put crypto or Bitcoin in that bubble category, and certainly gold and silver are not in a bubble.
Right.
They could quickly, all 3 of those, shift and start to expand pretty quick if those other bubbles start to break.
So this is good. This is a really good, because I think that all 3 of those that you mentioned, and there are others, but those 3 specifically, Bitcoin, gold, and silver, tend to be more of a store of value than some of the others that are more speculative in nature, including even to some degree real estate. There is some speculation there. There is some store of value there, but to your point, 5% over 40 years in the Midwest, I guess that is a store of value. It's not really an appreciating store of value, if you will, but it's solidly keeping yours. It's not keeping up with inflation.
Right.
And if you're not doing something like renting that house and getting cash flow, using it as an instrument, it wouldn't be just a thing to throw your money into. You'd be losing it from inflation.
So it's a real asset, right?
It is a real asset.
It's not like, like the U.S. dollar is. Some people look at that as an asset.
It's not an asset. It is not an asset.
Right, because you pretty much, it can disappear, right? They can change the currency.
They can change it. They can print it. They can.
Right.
They can.
Just a quick side note. I was reading something, and someone said that when they invest in Bitcoin, and when they go to consume other things, consume other goods, they have to convert their Bitcoin into U.S. dollar. Like it was a reverse logic.
It's a silly thing,
right? Because it was
don't do that if you've got a Bitcoin.
Well, it was like their main thing was Bitcoin. Like that's what where they live, and they were doing like a foreign currency exchange for dollars that they could go and have go to the ballpark and have a hot dog type of thing, right? Where if we kind of reverse that and say, hey, we're going to Mexico for a holiday or for a vacation, right? We may convert our U.S. dollars to Mexican pesos so we can transact in that arena. Yeah. So I just thought it was the way he phrased it. So I was like, wow, that's really kind of a different way of looking at it. From that, but that's a side. But
I think it's a good segue because I think it's a good sidetrack because the really idea would be if Bitcoin is truly a store of value, you don't want to go spending that. You want to borrow against it, and it is something that you can borrow against. This isn't for this show, but you could have Bitcoin, borrow against it. Then you're not talking capital gains or anything like that. You're just talking about a loan against a collateral like your house. But this is a collateralized Bitcoin, and you can then go and spend money or do things with it while the Bitcoin is appreciating. Now, there is the risk of Bitcoin dropping like a rock and you having to re-collateralize some of that.
But that's the same risk as if you put a mortgage against the house.
Yeah, if your house drops down, they may have a call. They may have a capital call.
Right.
I wanted to talk, since we were a bit on cryptocurrency and bubbles, there's plenty of them, but there's one certainly that's kind of got some press out there that hands down is a bubble, a freaking bubble, and it's called Dogecoin.
DOGE?
Yeah, or doggy coin. Some people call them coin. It's got the little Welsh corgi as its its symbol. But that coin, for example, was below a penny, if we're talking relating it in dollars, below a penny, and yesterday it got as high as 39 cents. Today I think it's back down to 27 cents. But you want to talk about an up and down, a total speculative and
So that's like,
bubble pop and drop.
so from a penny to 27 cents is like 2,700%?
Yeah.
Wow.
Yeah. Or how about to 39? And it was sub penny to 39 cents. I got a buddy who got into it at about right around 8 cents or so. And he's saying, I'm going to hold for the long run. Well, dude, there is nothing about this coin that is real. Even the guys that created the source around it said, this is a joke. I created this as a joke.
Really?
Yeah. But what's happening is it's, the meme, and a meme gets running and people go, wow. And there's real, growth. There's real, it's gambling, man. It's totally gambling.
Well,
so it's like a casino, and sure,
yeah,
if you spin the thing and you happen to hit, you're going to get money.
That's why people need to be careful with their investments, right? They need to do their due diligence and figure out what's there. Even with real estate, you just don't dump money into a property. You have to understand there's property out there that you do not want.
Yeah.
That it may be sitting on a bad septic tank, and it would cost you more to have that property cleaned up than it is just getting into it and getting any sort of cash flow or appreciation on it. So you just have to do your due diligence, and that especially around the cryptocurrency world where there's just like, it seems like every couple hours a new cryptocurrency is hitting.
It's true.
Is hitting the thing.
It's true. It is every couple hours. That's what's happening. I mean, it's true. There are thousands and thousands of them out there. So,
right. So let's going back to the bubble. So it does seem like a lot of stuffs are in a bubble, and I think how do you protect yourself against that when everything is in? Well, we kind of decided that gold, silver, and Bitcoin are not in a bubble.
Right. I don't think they are. I mean, that's just our opinion.
Right.
You may have plenty of people out there that will say any one or all of those are.
Well, I'm pretty sure we can point to gold and silver and compare it to some of the other things
It's
and
got
say
5,000 plus years, right?
Right, but there's also charts that compare it against the real estate and the stock market at the same time periods, and you can obviously see that those markets, stock market and the real estate market, are in hockey stick growth, right? The momentum or whatever that is. And gold and silver is just kind of chugging along, right?
Yep.
So there's definitely a disconnect in the ratios of if we were across the board inflation period, gold and silver would be keeping up with those charts, and they're not.
Right.
So either manipulation or whatever it is, they're not in that same growth pattern, and so I wouldn't consider them in that expansion of bubble growth.
Yeah, and one of their characteristics that really keep them around is their sense of scarcity. Even though they're not completely scarce, their scarcity does keep them, I think, going along.
So one thing, and I don't know if there's an answer for this one, but or at least I'm not expecting you to have an answer. But if you have one,
all right,
then I would be interested.
I always have an answer.
So we have these bubbles. Let's say that they do pop, and I believe when they do pop, it's going to be a ripple effect. Once the first one goes, I think it'll go into the other ones. Right? Real estate goes, market goes, goes, real estate goes, and then whatever other bubbles that there are out there, they're going to go as well.
Pop, 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 pop.
There's the mortgage bubble, and I mean there's a whole bunch of stuff that all related to each other, and then we get into where those go, and everybody flocks over to the gold and silver, and even more so in Bitcoin, because a lot of people are going into Bitcoin now.
Yeah.
And those start to take off and potentially become what we're calling a bubble today. Those look like they may be a bubble. So at what point, those that are holding those assets, do they sell or do they hold on? right? And then
Yeah.
if they sell, where do they go to? If the U.S. dollar is in a bubble, what do you? And that's the question I have. Like, what do you do?
Absolutely. I think you nailed it, and I do have somewhat of an idea around this anyway, because I've said the same thing. So let's say the U.S. dollar starts to inflate like crazy, and it turns into kind of a less and less of a value in the world. Because let's face it, right now the U.S. dollar gains its value as a trusted currency worldwide.
Right, but it's perceived strength.
It is, it's perceived.
It's perceived strength, right? Because our government is producing more dollars, and so if you have more dollars, then the $1 you have is actually less value, and that's where that inflation comes into place.
Right, and so that's my point: is that as long as that perception of value in the world is in and around the dollar, then it's an exchange. I don't even call it a store; it's an exchange of value. But the day that changes, well, then some other currency might. And that day, if all of those pop bubbles start happening, I'm not so sure that I want to put any stock in that US dollar. And so if it is in Bitcoin, let's say for me, and Bitcoin starts going through the roof, is there a place that I want to move that value? My own personal thing, as long as technology continues and we don't go back to sticks and stones, I personally am going to maintain in Bitcoin because of its scarcity and because of all the things in another video we talked about of its characteristics that make it a true store of value, not an exchange of value. And being a true store of value, then I guess that begs the next question, okay, yeah, but how do you then transfer that? Well, if it's super transferable, which it is, and the new currency of exchange is X or Y, then arguably I could either borrow against in that new currency and exchange value, or if I needed to, I might convert some of that Bitcoin, doubtful, but maybe, into that other currency to do that exchange around there. Or for that matter, I just do a direct exchange of Bitcoin to Bitcoin for something that I want of value.
Yeah.
You know what I'm saying?
Yeah.
So I hear what you're saying is we got to look for what is that. Now, I also am personally into diversification, just not into diversification of the U.S. dollar. I do love real estate, and I do have, some things in the stock market but I gotta say.
So if we look at like real estate, and so I always look at it from like a real asset standpoint, right? So when you're dealing with stock, that's paper.
It is.
It's an agreement with paper, right? You might have, and the reason I say is because I had WorldCom stock, and that stuff disappeared, even though that WorldCom MCI, they had physical buildings and wires all over the place.
Right.
So whatever you can come up with arguments around a company owning stuff, it's still paper.
You're right. It is paper.
Where real estate, even though the title isn't paper, there's a physical piece of land you can go stand on with that.
Okay,
right?
so what happens in a Marxist state, that this country becomes a Marxist state and private property is absolutely...
I think owning land is going to be the least of my worries.
Yes, but my point is, real estate also is based on the belief that private property is something
that could be anything, right? I mean, think about the people that had homes and hotels and businesses in France and Germany during World War II, right? Where they just bombed the crud out of it, and I guess England too, right? So
I'll tell you what, I'll take my Bitcoin, hide it away on a piece of paper, and you're not getting it.
Well, right. So it's the hard assets that you kind of want to go to.
The hardest assets,
right? Because if you have gold.
The challenge with gold is if I got to run because they're coming at me, I don't know how many kilos of gold I can put in my backpack.
Yeah, you have to be in good shape. Gold and silver for any of those metals, right? But it's a hard asset, right? So if you're able, that kind of has stayed with the humans for many, many, many years of trading. Crypto is challenging for a lot of people because it's not a physical type thing where you can actually touch. It's all in the computers. And so as long as we have computers, we have crypto. But I think all of them have their challenges, and you have to kind of pick one.
Yeah, we're going to wrap it up. And I guess in the end, I'd have to say there's a lot of bubbles out there. Think of them as the balloons, and you're like in the basket in the balloon and floating around. And one of those balloons may very well pop. So you better have some sort of a parachute.
Yeah. Well, I think the lesson that you mentioned FOMO.
Yeah.
Fear of missing out, which is real.
Yep. It is.
And so this is a challenge that I have, and something that I kind of need to get past is that, you know, I don't get into a market because I think it's going to turn, and so I'm waiting in certain markets, waiting for it to dip, to drop, so I can get a better buy.
Right.
Right? But we can't time when that's going to happen or how fast it's going to happen. And I don't know if I want to buy a falling knife, and that's kind of part of that fear, right? Is that if I'm in a bubble and I'm buying the bubble, and if it pops tomorrow, then I you know, not necessarily catching a falling knife, but I certainly watch that knife go with me.
Oh, no doubt. I'm watching two of them right now.
But the thing is, when I mentioned earlier about the real estate, in 2008 was the big crash, and the secular story with real estate is that, you know, 8 years, 7 years, whatever it is, that it would crash again. And so I kind of went on the sidelines in 2016, 2018, something like that. And then the market kept on going, and so I missed out on a lot of those gains, right?
On 5 years, almost.
Right, and so getting back in, I wasn't completely out, but I did some pause and looking, and so we have that with the market, with crypto, and so I guess my encouragement is you're watching some growth right now, and you can watch it go up, you can watch it go sideways, you can watch it go down. But you are missing out if you're not in.
I totally agree. If you got it in the savings account, you're losing every single day. You know that. You may think you've got your money in there, but you're losing every single day, right? It's good to save.
Yeah.
But maybe there's some places to save that are a little better than just a straight up, or maybe you take some and put it into something that's going to be a growing asset.
Well, and if the market changes, wherever it's at, right? If it's the stock or the real estate, when it all goes down, you probably want to have it so that it is in a real asset or a hard asset, so that value is maintained of some level, and eventually over a long period of time that it's going to surpass where we were at the time it popped.
Agreed. So, takeaway: bubbles happen, right? And
it's part of the thing,
of the whole
and
thing.
I think
don't worry.
You might as well get in and have some fun with the ride, versus
in.
watching and going, "Well, good thing I didn't get that and miss the next one."
Right.
So,
well, cheers, Steve.
all right, maybe we should have our viewers hit that subscribe button, and that like.
Yes.
And certainly, if you enjoyed the show and want to add a comment, please do that.
And talk about it. Talk about it to everybody.
Yep. All righty.
Here's to bubbles.
Cheers.